Ray Dalio just issued his most direct warning yet. Not about interest rates, not about stock market corrections, about the collapse of the entire system we've built our lives around. The man who predicted the 2008 financial crisis, who foresaw Japan's lost decades, who built the world's largest hedge fund by understanding patterns most investors miss, is telling us we're living through something that only happens once in a lifetime. A systemic breakdown of the global monetary, political, and geopolitical order. And if you think this is just another market cycle, you're about to lose everything you've worked for. Because what's happening right now isn't normal. The United States federal debt just crossed 100% of gross domestic product. Not during a world war, not during a pandemic. During what economists call a recovery. The deficit for 2025 hit $1.8 trillion. That's nearly 6% of the entire economy flowing into a hole that never gets filled. These aren't sustainable numbers, they're endgame numbers. And Ray Dalio knows exactly what comes next, because he's studied this pattern across 500 years of history. He's watched it destroy the Dutch Empire, dismantle the British Empire, and now he's watching the same forces converge on America. Here's what most people don't understand. Dalio doesn't look at markets the way normal investors do. He doesn't chase quarterly earnings or follow the Federal Reserve's latest statement. He studies empire cycles, the rise and fall of global powers across centuries. And he's identified a pattern so consistent, so mathematically precise, that once you see it, you can't unsee it. He calls it the big cycle. Every dominant empire follows the same trajectory. First, strong education systems create innovation. Innovation drives economic output. Economic output funds military expansion. Military power protects trade routes. Trade dominance establishes a reserve currency. And the reserve currency gives the empire an extraordinary privilege, the ability to print money the whole world accepts as payment. That's where America sits today. At the peak, with the dollar still commanding 60% of global reserves. Still funding government spending through bond auctions the world attends. Still enjoying the exorbitant privilege of borrowing in a currency we control. But here's the problem. Reserve currency status isn't the beginning of empire power, it's the end. Dalio's research across Dutch, British, and American cycles shows the same pattern. The reserve currency lags, it arrives late in the empire's rise and stays long after the underlying strengths have eroded, like a language that persists even after the culture that created it has declined. People keep using it out of habit, out of momentum. And that transition, that moment when the world stops believing in your currency, that's when empires collapse. So let's talk about the 5 forces Dalio says are converging right now, the same 5 forces that destroyed every previous reserve currency empire in recorded history. Force number 1. The debt supercycle reaching its mathematical limit. Dalio calls this the long-term debt cycle. It runs roughly 75 years, give or take 50 years of variation. It's driven by a simple mechanism. Governments borrow during crises, print money to service debt, devalue currency to make repayment easier, and eventually, lenders lose confidence. We're deep into the late stage. U.S. federal debt held by the public was 97.4% of GDP in 2024. It hit 99.8% in 2025. Congressional Budget Office projections show it reaching 118% by 2035. Without any major war, without any catastrophic recession. Just the normal operation of government spending exceeding government revenue by 6% every single year. Now compare that to history. The last time U.S. debt exceeded 100% of GDP was 1946, right after World War II. But here's the difference. 1946 America was the world's manufacturing superpower, the only major economy not bombed into rubble. With a young, growing population, with productivity gains from returning veterans entering the workforce, with global demand for everything American factories could produce. 2025 America is none of those things. Manufacturing has been offshored, the population is aging, productivity gains are concentrated in software and services that don't rebuild infrastructure or produce physical goods, and most critically, interest payments on the national debt just exceeded $970 billion in fiscal year 2025, making debt service the 3rd largest federal expenditure after Social Security and Medicare. Let that sink in. The government is spending nearly $1 trillion a year just to pay interest, not to reduce the debt, not to invest in infrastructure. just to service existing obligations. And as that debt matures and refinances at higher rates, those interest costs explode. Every percentage point increase in average interest rates adds roughly $300 billion to annual debt service. The pile grows exponentially while economic growth crawls linearly. This is what Dalio means by the debt supercycle reaching its limit. The math stops working. The system requires perpetual growth to service perpetual debt, but growth is slowing. Debt is accelerating, and the gap between the two is widening every quarter. Force number 2, internal political conflict, tearing the country apart. Dalio's research shows this pattern clearly. As debt burdens increase, wealth gaps widen. As wealth gaps widen, populism rises on both extremes. The left demands redistribution. The right demands preservation. Compromise becomes impossible. Democratic institutions, which depend on negotiation and incremental progress, start to break down. Sound familiar? Post-2024 election, America is more divided than any point since the Civil War by most objective measures. Congressional approval ratings hovering near record lows. Supreme Court legitimacy questioned by half the population. State governments openly defying federal authority on immigration, abortion, gun rights, and election procedures. Political violence becoming normalized. Trust in institutions collapsing across the board. This isn't partisan commentary. This is observable social fragmentation, the kind that precedes revolutions, the kind that Dalio's data shows happening in the late stages of empire cycles when economic pain becomes unbearable and citizens start blaming the system itself. Because here's what most economic analysis misses. Debt isn't just a financial problem, it's a social problem. When government spending crowds out private investment, when inflation erodes purchasing power, when young people look at the economy and realize they'll never achieve what their parents did, that rage has to go somewhere. It goes into the streets, into protests, into the breakdown of civil discourse, into the kind of internal conflict that makes it impossible for governments to make the hard decisions required to fix the underlying problems. Force number 3, the geopolitical order fracturing under Chinese competition. For 75 years, America has operated in a multilateral system it created. Bretton Woods established the dollar as reserve currency in 1944. The World Trade Organization, NATO, the International Monetary Fund, all American constructs designed to maintain American dominance through rules-based order. That system is ending. China's economy, measured by purchasing power parity, already exceeds $35 trillion. Its Belt and Road Initiative is rebuilding global trade infrastructure to bypass American systems. Its technological advancement in 5G, artificial intelligence, and quantum computing rivals or exceeds Western capabilities in key areas. Its military spending is growing while American defense budgets face fiscal constraints from debt service requirements. And in 2025, the trade war went kinetic. Tariffs hit 145% on Chinese goods. China retaliated with 125% on American products. Rare earth export controls threatened American manufacturing. Port fees disrupted maritime trade. Technology decoupling accelerated across semiconductors, pharmaceuticals, and critical supply chains. This isn't a trade dispute. This is the early stage of great power competition, the kind that historically ends in military conflict. When a rising power challenges a declining hegemon for global dominance, Dalio calls this the Thucydides trap, named after the ancient Greek historian who documented how rising Athens threatened established Sparta, making war inevitable. History shows this pattern playing out 16 times over the past 500 years. 12 times it ended in war. Only 4 times did the transition occur peacefully, and every indicator suggests America and China are on the warpath. Not because either side wants conflict, but because the structural forces, the debt burdens, the internal political pressures, the competition for resources and technological supremacy make confrontation almost mathematically certain. Force number 4. Technology disrupting everything faster than society can adapt. Artificial intelligence is rewriting every economic model. Automation is eliminating middle-class jobs at accelerating rates. The productivity gains don't flow to workers, they flow to capital owners. The wealth gap widens. Social cohesion fractures further. But beyond economics, technology is weaponizing information. Deepfakes undermine trust in media. Social media algorithms amplify division. Cyber warfare threatens critical infrastructure without a single shot fired. The same forces that could solve humanity's problems are being turned into tools of manipulation and control. This accelerates everything else. The debt crisis, the political fragmentation, the geopolitical rivalry, technology acts as a multiplier on every other force. Force number 5. Acts of nature becoming more costly and unpredictable. Climate change is no longer theoretical. It's trillions in annual economic damage. Droughts, floods, hurricanes, wildfires, supply chain disruptions, mass migration, resource conflicts. Dalio estimates climate costs at $1 trillion per year if mitigation efforts succeed. Catastrophically expensive if current trajectories continue. And those costs hit hardest during debt crises, when governments have no fiscal space to respond. Pandemics revealed how fragile global systems have become. One virus shut down the world economy, required printing trillions to prevent collapse, added massive debt burdens, and we're no better prepared for the next one. These aren't separate problems. They're interconnected forces that amplify each other. Debt limits, climate response. Climate costs, increased debt. Political division prevents coordinated action. Geopolitical rivalry weaponizes resource scarcity. Technology accelerates every trend in both positive and destructive directions. And this convergence, this perfect storm of 5 forces hitting simultaneously, this is what Dalio says hasn't happened since the 1930s. The last time debt, division, rivalry, technology, and nature collided like this, the world got the Great Depression and World War II. The old order burned. A new one emerged from the ashes, and tens of millions died in the transition. Now here's where it gets personal, because this isn't just about governments and empires. It's about your money, your savings, your retirement, your ability to protect what you've built. Because when empire cycles turn, when reserve currencies collapse, wealth doesn't disappear, it transfers, from those who don't see it coming to those who do. The 1930s transferred wealth from stockholders to gold holders. The 1970s transferred it from savers to hard asset owners. Every transition creates winners and losers. And the losers are always the same people. The ones who trusted the system, who believed their government would protect them, who thought their paper claims on wealth were actually worth something. Part 2 of this investigation reveals what comes next, how Dalio is positioning his own portfolio, what history tells us about the final stages of empire decline, and most critically, what you can do right now to ensure you're on the winning side of the greatest wealth transfer in modern history. Let's talk about what actually happens when reserve currency empires collapse. Not theory, not speculation. Historical fact across 5 centuries of documented transitions. You'll realize we're not in the beginning of this crisis. We're in the middle stages, right where the Dutch were in 1700, right where the British were in 1920. And if history is any guide, we've got maybe 10 to 20 years before the full transition completes. Here's how it unfolds. Stage 1. The empire reaches peak power. Its currency dominates global trade. Its military protects shipping lanes. Everything appears stable, permanent, inevitable. The Dutch guilder held this position in the 1600s. Amsterdam was the world's financial capital. Dutch traders controlled global commerce. The East India Company pioneered modern capitalism. Dutch ships dominated the seas, and for decades it seemed like Dutch supremacy would last forever. But underneath, the rot had already set in. Debt was accumulating to fund military expansion. Other nations were becoming more competitive. The guilder's status as reserve currency meant Dutch labor and goods were expensive, making exports uncompetitive. The empire was living on momentum, not strength. Stage 2. Competitors emerge and challenge the dominant power. For the Dutch, it was Britain. Rising education systems, naval innovation, colonial expansion. The British weren't just competing economically, they were building an alternative system. Alternative trade routes, alternative financial institutions, alternative power structures. The transition took decades. The Dutch fought 3 wars, trying to maintain supremacy. They won some battles, lost others. But the underlying trajectory was clear. British power was rising, Dutch power was declining, and the reserve currency status of the guilder, the last thing to rise, would be the last thing to fall. By 1720, British sterling was the new global reserve currency. The guilder became a regional currency. Dutch financial dominance ended. The empire didn't disappear overnight, but it never recovered its position. For Britain, the challenger was America. Same pattern, same timeline, same outcome. Britain emerged from World War I as the apparent victor. The pound still dominated global finance. The British Empire controlled a quarter of the world's land and population. London was the financial capital. But the debt burden from the war was crushing. 1920, debt to GDP exceeded 140%. Interest payments consumed a third of government revenue. The empire was bleeding financially, even as it appeared strong militarily. America was rising, industrial output surpassing Britain's financial power, concentrating in New York, the dollar backed by gold. While the pound's convertibility was suspended during the war and never fully restored, the 1929 crash exposed the fragility. The 1931 collapse of the gold exchange standard shattered confidence in sterling. By 1944, Bretton Woods formalized what markets already knew. The dollar was the new reserve currency. Sterling was finished. The transition took roughly 25 years from World War I's end to Bretton Woods. 2.5 decades of financial instability, currency crises, competitive devaluations, trade wars, political extremism, and ultimately World War II. Now, let's map this pattern onto America's current position. Stage 1 peaked somewhere between 1990 and 2000. The Soviet Union collapsed. America stood as sole superpower. The dollar was unchallenged. Debt levels were manageable. Economic growth was strong. The internet revolution was creating productivity gains. Everything seemed perfect. Stage 2 began quietly in the 2000s and accelerated dramatically after 2008. China's economy exploded. Its manufacturing capacity dwarfed American production. Its technological capabilities closed the gap. Its Belt and Road Initiative created alternative trade infrastructure. Its digital yuan challenged dollar dominance in Asia. The 2008 financial crisis exposed American financial fragility. The system required trillions in money printing to survive. Debt exploded. Real wages stagnated. The social contract between government and citizens started breaking down. And now, in 2025, we're deep into Stage 3. Open confrontation. The trade war isn't about tariffs. It's about two systems that cannot coexist, one rising, one declining, both nuclear-armed, both convinced of their own superiority, both facing internal pressures that make compromise politically impossible. History says this stage lasts 10 to 20 years. It involves financial crisis, currency instability, possible military conflict, and ultimately a restructuring of the global monetary system. So, what does that restructuring look like? There are 3 possible scenarios. Each has historical precedent. Each has different implications for your wealth. Scenario 1. Controlled devaluation and debt restructuring. This is what Dalio calls the 3% solution. Congress reduces the federal deficit from 6% of GDP. The dollar gradually loses value through inflation, reducing the real burden of debt. Foreign creditors take losses. Americans experience lower living standards, but the system survives in modified form. This requires political cooperation that currently doesn't exist. It requires painful choices that no politician wants to make. It requires foreign creditors to keep buying treasury bonds even as the dollar's value erodes. Historically, this is the rarest outcome. It happened in America after World War II through a combination of inflation, growth, and fiscal discipline. It worked because America had overwhelming structural advantages competitors lacked. 2025, America has none of those advantages, which makes Scenario 1 possible but unlikely. Scenario 2, crisis-driven collapse and emergency measures. This is the more common pattern. Debt becomes unsustainable. Bond markets revolt. Interest rates spike. The government faces a choice between defaulting on obligations or printing massive amounts of currency. They always choose printing, every time, throughout history. The resulting inflation devastates savers. Bonds become worthless. Cash loses purchasing power. Real assets, gold, real estate, commodities, surge in value. The middle class gets wiped out. The wealthy, who own hard assets, survive or even profit. This is what happened to the Dutch, to the British, to every reserve currency empire when the debt burden exceeded the economy's capacity to support it. The timing is unpredictable. It could happen in a sudden crisis, a failed bond auction, a major bank failure, a loss of confidence in currency stability, or it could unfold gradually over years as foreign creditors slowly diversify away from dollar assets and domestic investors lose faith in paper claims. But the outcome is predetermined by the math. The debt cannot be repaid in current dollars at current valuations. Something has to give. And throughout history, currencies always give before governments default explicitly. Scenario 3. Coordinated global reset. This is what Dalio considers most dangerous, and most likely if current trends continue. The system becomes so unstable that major powers coordinate a restructuring, a new Bretton Woods for the 21st century. The dollar loses reserve status, maybe to a basket of currencies, maybe to a digital currency backed by commodities or algorithms, maybe to the Chinese yuan if China wins the geopolitical competition. The details matter less than the outcome. Your savings, denominated in dollars, become worth less, maybe 30% less, maybe 50%, overnight by decree, to rebalance debt burdens and restore some semblance of stability. This happened in 1971 when Nixon closed the gold window. The dollar lost a third of its value against gold within years. Anyone holding dollars got poorer. Anyone holding gold or hard assets maintained or increased wealth. It could happen again. And given the scale of current imbalances, Dalio argues it probably will, not through some conspiracy, through mathematical necessity. So what does Ray Dalio actually recommend? First, understand we're in a new era. The rules that worked for 40 years won't work anymore. Buy and hold equity portfolios worked when the dollar was strong, debt was manageable, and American dominance was unchallenged. That world is ending. The new world requires active adaptation, diversification, not just across stocks, but across currencies, countries, and asset classes. Exposure to hard assets that maintain value through currency, debasement, gold, real estate, in strategically positioned locations, commodities, energy, agriculture. Dalio's own portfolio reflects this. He's reduced exposure to long-term U.S. bonds, which he calls guaranteed losers in an inflationary environment. He's increased allocation to inflation-protected assets. He's diversified geographically into countries less exposed to Western political dysfunction. He's not abandoning stocks entirely, but he's changing the framework, looking for companies with pricing power, real assets on balance sheets, global revenue streams that aren't dependent on American economic health, businesses that can thrive in a multipolar world rather than assuming continued American dominance. Second, stay liquid. The transition between orders is volatile. There will be opportunities to buy assets at distressed prices when panic sets in. There will be moments when governments offer deals to prevent complete collapse. You need dry powder to act when those moments arrive. Third, understand that diversification across traditional asset classes won't save you if the entire system is restructuring. 60-40 portfolios, stocks and bonds, worked when both asset classes moved in different directions. They fail when the common denominator, the dollar, is what's actually at risk. You need diversification across monetary systems, assets that hold value in dollars, euros, yuan, and whatever comes next, physical assets that exist outside the financial system entirely. Fourth, and this is critical, don't wait for certainty. History shows that transition happens faster than people expect once it starts. The pound's collapse seemed impossible until it wasn't. The guilder's dominance seemed eternal until it ended. By the time everyone agrees the dollar is in trouble, it'll be too late to protect yourself. The people who survive these transitions are the ones who act while the establishment still calls them paranoid. Now, here's the part most financial analysts won't tell you. The part that makes this truly generational. Empire transitions create the largest wealth transfers in history, from the established power to the rising power, from paper assets to real assets, from those who bet on continuity to those who positioned for change. The British, who sold sterling and bought dollar assets in the 1920s and 30s, preserved their wealth. The ones who trusted Britain would remain dominant lost everything. The Dutch, who diversified into British investments before 1700, maintained their family's wealth through the transition. The ones who stayed purely in guilder-denominated assets saw generations of accumulation evaporate. This isn't about market timing. It's about understanding which way the river is flowing and positioning yourself accordingly. The river is flowing away from dollar dominance, away from American unipolar control, toward a multipolar world where multiple powers compete and no single currency dominates. You can fight that current and drown. Or you can position yourself to ride it. Dalio is doing the latter. He's not betting against America out of pessimism. He's adapting to mathematical reality. The debt cannot be sustained. The political system cannot make necessary adjustments. The geopolitical competition cannot be avoided. And the outcome, while uncertain in details, is predetermined in direction. The American empire's peak is behind us. The decline is underway. And the final transition, the moment when the dollar loses reserve currency status and the whole system restructures, is approaching faster than most people realize. This is Ray Dalio's warning, not fear-mongering, not speculation. Pattern recognition based on 500 years of data. The greatest risk isn't that he's wrong. It's that he's right, and you did nothing to prepare. Because when empires fall, when currencies collapse, when the entire financial order reconstructs itself, there are no do-overs. You're either positioned correctly or you lose everything. The choice is yours. But history suggests you don't have much time to make it.